Hello and welcome to another Major Market Movements Into the Week Market Review for October 9th, 2015. I'm Quad G. In this video we're covering the PM complex, starting off here with gold. And today's move is inside double key reversal to the upside, and it looks like the price action is keeping above the 10 EMA, which is bullish. The market's recognizing the 10 EMA, the green line there, as support and bouncing off of it. And now we're starting to pressure the upper Bollinger Band while we're in a bullish alignment to the upside in the QG3. The week close as positive to the upside, seeing some follow through from last week's hammer candle, so that's appropriate. And the QG3, I can't really show you much there. It's nothing really to show you with that indicator. The RSI is coming up here and testing the 60 level. Previously, it did provide some resistance on the last swing high here. So, got to watch out for that. There is the potential it could be capped here. So, but we'll have to watch and see how the market plays it next week. If the RSI comes up and goes above, say, 62, 63, then more than likely the market's going to want to come all the way up to test the 70 level or even higher. And then if it does that, you might have to wait for a single negative divergence or a double before the market tops out and comes back. So that could be dozens of more points to the upside if we break that 62, 63 level potentially, just based on the RSI analysis here. The MACD is open to the upside. That's bullish on the daily, and on the weekly we're open to the upside as well, which is bullish. So overall picture for gold looking plenty bullish here. I'm considering adding another buy signal here soon, so watch for that in the next report. Let's take a look at silver. So silver here is dropped back a bit, but it looks choppy in nature. If you zoom in on it, we'll actually get into that a little bit later in the LA wave charts, but let me expand this out a bit. All right. So we're coming up here and knocking on the 50% Fibo retrace level for at the moment. But if the market continues to calm and chop sideways, there's some potential for some further upside, moving up here to the mid 16s or even higher coming up shortly. The QG3 is in a bullish alignment to the upside. Just want to show you here, highlight this movement here. We see that the price closed once, twice, 3 days above the upper Bollinger Band and then pulled back inside. That's a very common move. So whenever you get into this kind of dominance in a market where it's just beating itself against the upper Bollinger Band, by the time you get into your third day, it's best to be looking for topping action and watch for a corrective move to the downside. It doesn't necessarily mean that the impulsive drive to the upside is over, but it does mean that you're going to pull in and correct for a few days at least. And I think that's maybe what we're going to see here. You can see that the 10 EMA came up and provided intraday support for silver, and that's a good bullish development because it could continue to provide support as it continues to climb higher. Silver on the weekly closing, let's see, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13 weeks. We eclipse a 13-week move in the weekly move in silver. So we're all the way back up here, closing this week 13 weeks higher than back here in July. So that's a bullish development. You can see that last week's bullish hammer candle did provide the oomph that we needed to the upside into this week, some follow through. Let's see. We are looking, it does look like we're getting some positive divergence on the top side of silver here. So if we take a trend line here and compare it in the EWO from this last swing high to our new one, we're just on the verge of producing a positive divergence on the top side where you get a higher high in the oscillator compared to the last swing high here, which is a higher high in the price. So that just means that it encourages more upside. It strengthens the idea that maybe there's a significant bottom here. The RSI, we see this silver came up, pierced the 60. We're right up here into 67 now. A little pullback, but this market could continue a little bit higher, at least up to test the 70, or maybe even higher. So I don't think the silver's quite done yet. I think it could have some more room to the upside to go. And the MACD is open to the upside on the daily, and on the weekly, open to the upside as well. So overall picture for silver is also looking very bullish here. So in the long positions, it's good to be holding from the buys that were put in down here. And then if we get a little bit more corrective action and find a low risk trade setup, I'll certainly alert you to that and for the potential of another shot higher. And I can give you more details here in a moment with the LA wave charts showing why instead of topping here we could continue up higher. All right, so platinum's on a tear to the upside. It does look to me as though this may have been a final fifth to the downside. It looks very choppy, some kind of ending diagonal, but it's difficult to count. There's numerous different ways it could be counted, but the results are pretty stunning here. We do have an impulsive move to the upside with 1, 2, 3, 4, 5 waves up. I do think that this fifth wave to the upside may not be complete just yet. Maybe zoom in on it a little bit further here. It does look to me that we've got 1, 2, 3, working on a fourth wave here and maybe one more final fifth to the upside, which looks like it may tie or even breach above this last swing high here in the price, right here at about $990. And once we do that, we may pull back, do a corrective action down, maybe form a right shoulder of an bullish inverse head and shoulders pattern. So we got the left shoulder here, left neckline, head, right neckline, and then we may pull back into a wave 2 correction down here into the previous wave 3-4 zone of this impulse, maybe right here and then about 940. That could be the end of our right shoulder, and then from there we'll see another impulsive advance to the upside. So that's something to watch for in the days ahead. And the price is also, we shot right through the 20 DMA, and we're coming up here and challenging the upper Bollinger Band also. So that's another key point of resistance right there at about $990. That may, because of the quick pace of this move, going too far too fast, the bears might jump on this and use the Bollinger Bands as a backstop for reinitiating a short position to the downside to maybe come down here and back test the 20 DMA, which is starting to bottom and maybe curling up to the upside here fairly soon. And currently that's down there in that 940 zone. So watch for that. The 20 becoming a level of support. Previously, let me go back here. Previously, you can see that the 20 DMA held as resistance. This time around, it could hold as support. Platinum on the weekly, we do get the inside key reversal on the weekly, almost a double if it just closed a little bit higher. But that's still a reversal candle all the same. That puts in a significant low there at 890.50 for key support. Let's see here. I think I've pointed this out several times, but I'll point it out again. That we've got this. I don't think I actually posted it here. I talked about it, but I didn't actually paint it on the chart. And that is we have on platinum here, we do have the positive divergence in the EWO. Let me get rid of this, and we'll put it there as well. So from the last swing low, close enough. So from the last swing low, we got a lower low in the price, but the oscillator here is showing a higher low in the oscillator. So that's setting up the positive divergence and giving us reason for this impulsive move to the upside. And the RSI coming up, we're testing the 60 level. Again, that's a key level of resistance. It may poke up a little bit higher or develop some kind of negative divergence, maybe in the smaller time frames, in the 2 hour and 4 hour possibly, setting up that negative divergence for just a short-term top, and then watch for a pullback. Platinum on the weekly MACD is closed out neutral on the MACD there, and on the daily we're open to the upside. That's bullish. So overall picture for platinum is looking bullish here. I think we could get another couple days of upside, but then top out somewhere in and around that 990 level, and then from there see a pullback in 3 waves for a wave 2, maybe down there into about the 940 region, and then from there good chance for another surge higher. All right, so let's take a look at the Elliott wave charts. Starting off back here with gold. All right, so here's the gold micro count that I'm entertaining at the moment. We got a ABC to the upside, looks complete, and now X wave to the downside is finished, and now we have, I think we're working on another zigzag to the upside that isn't finished yet. We got this initial impulse up for wave A. Now I suspect we've got a wave A, B, and possibly C to go, and then from there another shot higher into A of C of 4. There's other ways of counting this. Obviously, it's very choppy, sideways movement. So there is a chance that if we stay above this swing low right here, at 1136, we keep above that. And we, early next week we see some choppy sideways movement, maybe right above this purple trend line, forming some kind of bull flag. From there, that might be a good indication that this market's going to just take off higher and is not interested in coming back down for a correction. And here may be the reason why. We've got this triangle pattern that's been playing out, and I think that the bears in this market likely had, were betting on this for another thrust to the downside. And obviously with a shot up here above wave C, that negates the triangle pattern. With wave E cannot be higher than wave C in this type of triangle. Now it could be, the other possibility here that I see is that this could be a C leg, and this triangle could just expand out a little bit further. That's a possibility. But again, I wouldn't bet on it until we see some serious rejection taking place in this market at these levels, and so far we're just not seeing it. Um, so back to this former trend line, which has been tested once, twice, three times. You could say that's a fourth time. So the potential rule for breakout here. Maybe next week we could come down here, bounce along that blue trend line, back testing it, and then maybe see a breakout higher, maybe coming up here into the 1180 to 1200 range. There is this manic drop back here that took place back here in June, and the market may be interested in coming up here and cleaning up that mess right here and now instead of later. But on the midterm Elliott wave picture, I think this is all, this current movement down here is all, it's encompassing this A wave to the upside of a forward flat. And what I see is, let me zoom in here a bit. We've got this three-wave move to the upside for C, got wave X, and now we're working on this second zigzag to the upside that I think could come up here to 1180 at least, maybe even 1200 to finish out C of A, and then from there maybe see a drop off in the price. The key when counting a double zigzag, it's extremely important that the second zigzag come up above the previous end of the first zigzag, or C, and that end is at 1169.86, and we haven't reached that point yet. So I think give it a few more days. I think we could see a pop up above that. I think 1180 is a really good target. Even again, fixing this technical damage here right up here at about 1200 is very possible as well. So we'll wait and see. Obviously, if this if the price just soars and comes up here and tests or even breaks the 1232 level, that's going to be extremely bullish. That's going to cancel this particular midterm Elliott wave count, and we're going to have to reevaluate what's taking shape here. And come up with another count that would make sense for that type of move. I have a couple ideas, but I don't want to go into it right here and now. We'll just wait to see until it actually gets there, and then we can dive into that. All right, let's move on to silver here. My original expectation was that from this wave 3 low, we had a wave A, a wave B, a wave C, and now the expectation is that we're going to see a rejection here, a strong rejection that was going to start another thrust to the downside into wave 5. It should be able to come down here and take out 1396. But so far, this action is just very choppy and sideways right now. And if it continues to do that over the course of most of next week, building up a bull flag, that could be extremely bullish and allow for an even greater surge to the upside. And I'll show you why here in the next chart. Because right now we're wrestling with this blue trend line that's been tested 3 times and now working on the 4th time. So potential rule of 4 breakout here if we just continue to chop sideways and eat our way. The price was to eat its way through this blue trend line in a bull flag type of formation. Then we could see another pop to the upside, coming up here to the mid-16s at least, maybe even much higher. So right now I think it's a fine place to be holding and watching, and we'll see what the market gives us here. There's obviously the market could still drop down from here, but over the last couple days I'm just not quite seeing it. All right, so here's GDX. The price is sailing higher. We're still working on this wave 3 black, it looks like, with today's movement. I do think it will top off here fairly soon. It may have enough to come up here and fill this previous gap right there at the close of that was 1670. So it could reach up, fill that gap, maybe come as high as 1670-ish, 1660, something like that, and end wave 3, and then we could start pulling back into a wave 4 flat. Wave 2 does look like it was sharp. Wave 4 should alternate and form a flat correction, possibly a contracting flat. And then from there, another push higher into 5 of C of 4, potentially. Also, this neckline that we were looking at, it looks like it's playing out as expected with, we had the left shoulder, the head, and the right shoulder. Clearly broke the neckline. And so if you, the basic measurements of an inverted head and shoulders pattern, or even a regular head and shoulders pattern, is you take the measurement from the head to the neckline. In this case, it's roughly about 2 points. And then you take that measurement to the breakout point, which in this case was right around 15. So tack on 2 points to 15, you come up with a potential target of 17. So that's where I think wave 5 of C of 4 could possibly end. There's also this gap right here, all the way up to 1784, that's might be begging to be filled as well at this point in time. So that 17 to 1784 level, plus that blue trend line, is also a key level resistance. You might, which has been tested a number of times already in recent history. So at least a test. If we come up and test, obviously, and we get a flag type formation, that could be very bullish, and we could push on even higher. But again, I think the market may be interested in coming up and testing this territory in the days and weeks ahead. So far, there's nothing there to suggest it's ready for a pullback at this point in time. All right, so here's the longer term count for GDX. For those that are new and want to know where we are with the larger count, we've got wave 1, wave 2, all the way back here in 2012, and then a sub 1, sub 2 sharp, sub 3, a choppy contracting triangle. 4 flat alternates with the 2 sharp, as would be expected, and then a wave 3 down, wave 4 sharp, which also alternates with this running flat up here. And then we're working on the last 5-way move to the downside, and the expectation is that we've got wave 1 down, finished, wave 2 was sharp, wave 3 down is finished, and now we've got this expanded flat that's playing out with an A, B, and C. C leg is, my expectation is that this is a 3-3-5 expanded flat. So wave C, not likely finished yet, because we only have 3 waves up instead of 5. So we need 1, 2, 3, 4, and 5 to come. And once that's finished, ending again, maybe close to that blue trend line, we may see one more thrust to the downside. And honestly, I think it's entirely possible that this market may be interested in just getting this over and done with. You can see that this shot to the downside was very quick. This shot also very quick. Even this wave 1 was very quick. So there's a certain amount of anxiousness in this market to sell off and get basically all the previous bulls completely wiped out, get any new bulls completely wiped out, and start from scratch. So I wouldn't surprise me one bit if we came up here to the 17 level and we got a manic panic crash to the downside and get everybody spooked. You'll see renewed calls for just horrible levels, going down to $5 or whatever. I'm sure there's plenty of opinions out there, but my thought is this: if we did see such a flush, that would probably set up a premium buying opportunity upon the next lower low in the price, which could be down here in the $12 range, maybe even 11-ish, somewhere in there, watch for bottoming action, and then it could be a V-shaped bottom, I suspect, and shoot right back up. Now, obviously, that's the scenario I've painted here. There's other scenarios that could be counted as well. I think right now between bullish and bearish, long-term or even mid-term counts, that blue trend line is going to be the key between the two. And it's all going to depend on the attitude of the market once it gets there, whether we get sideways choppy, bullish flag type formation, or we see an immediate rejection. Just have to wait and see. Let's move on. GDX, here's GDX on the QG3 and continuing to push the Bollinger Band higher. We haven't actually seen this kind of pressure on the upper Bollinger Band for quite some time. We'd have to go all the way back to really this is more indicative of the kind of action we're seeing right now, where you see the initial push, we get a small pullback, and then you see a continued drive to the upside. So I think maybe that's what we're experiencing here is we're seeing the upper Bollinger Band continue to be pushed with some pullbacks as the 3 EMA, which is this orange line, 3 EMA approaches the upper Bollinger Band, and that's going to be a signal that the market's tiring out and may pull back. So watch for that in the days ahead too, is that orange trend line or that orange 3 EMA coming up very close to or even breaking above the upper Bollinger Band. That just means that the market is kind of losing its head a little bit, getting manic in its behavior, and is deserving of a pullback, some correction. GDXJ, GDX is kind of taking the lead here, and GDXJ is not experiencing the same level of bullishness. You can see that the QG3 is bullish here. It's in a bullish alignment to the upside, and we've got the 3 EMA not even close to the upper Bollinger Band yet. So there's still plenty of room there for some upside action. Let's see if we get it. Obviously, the 20 DMA is going to be a key level of support, as well as the 10 EMA, that green line there, also key levels of support with any pullback. And I also want to point out this. Again, this long-term trend line or mid-term, I think we're over a year now. That's really a long-term resistive trend line, all the way back here to July of 2014. And you can see that that trend line, this is on log scale as well, has been tested multiple times now. We could have a rule of 4, even a rule of 5 breakout, depending on how you see it, right here and now. If we zoom in here, we can see that we had a little bit of fight with that trend line, but we broke solidly higher today. Yesterday did look like it was going to give us an inverted hammer candle, and that was the reason I was thinking wave 3 was possibly done. But with today's move to the upside, that's just another signal of bullishness to come right back up and close above this hammer candle. It is a very bullish behavior. That doesn't mean that upon maybe advancing a little bit further, we may not come back here and give a back test of the blue trend line here in the next several days, maybe in a week or so, a week or two. Might see a back test and then another advance higher. That's also a possibility. Okay, so that concludes our coverage of the PM complex for this week. I hope you all have a great weekend, and we'll be talking to you later. Adios.